Hey everybody and welcome to Breaking Biotech. Hope you guys have been having a great holiday. Mine has been awesome. Despite the downturn in the market, we made it. This is it. This is the last episode of the year. So it's good to look back and look forward and see what we can do to improve next year. And today I want to talk about three things. I want to talk about the macroeconomic outlook that we have right now, which obviously had huge implications for the stock market. It did in December, and it will continue to as we move forward. Going to talk about the drama surrounding DBVT and them pulling their BLA application from the FDA. And we're going to wrap up today talking about the companies involved with CRISPR and Cas9 and how they are pretty much at the whims of academia from this standpoint and everything that academia releases regarding the tech surrounding CRISPR. So, going to talk about that, do a quick portfolio wrap up for the year, and see how the downturns affected me, which is not good. And kudos to everybody who pulled out all their money before the Jerome Powell FOMC meeting, which obviously led to a big decline in the stock market. So I'm going to pull that up right now. So we can see here, this is the SPX. We had like 5 red days coming into the FOMC meeting. And I think given this, investors really thought that Jerome Powell is going to come out there, who's the Fed chairman, and have a huge dovish outlook. Going to talk about tightening, not tightening, but relaxing on the rate increases, and also perhaps slowing down on the balance sheet unwinding. So, what that means, and I have the chart right here, is the whole economy has been on a very cheap credit cycle right now. So the Fed had very low interest rates for a very long time, and they also pumped a substantial amount of money into the economy, which made it very easy for everybody to buy up equities, buy up bonds, buy up everything. And Jerome Powell got into the Fed chairman position and changed all of that. So since Trump got into office and appointed him, he's been increasing the interest rates slowly, and has also accelerated the unwind of the Fed balance sheet. So this tightening cycle has led to sort of a clampdown on money that's available for people to buy whatever, including equities. So what Powell talked about is raising interest rates 25 basis points, and he indicated 2 more rate hikes in 2019, which is a difference from the September meeting where they said that they would do 3 rate hikes in 2019. So it was dovish, but it wasn't that much more dovish than the September meeting. So people really thought that they might say, no more hikes in 2019 until we see how the economy goes. They also talked about not changing the unwind of the balance sheet. So, as part of a stimulus, the quantitative easing that went on in the last 10 years, the Fed has finally decided to reverse that and go into quantitative tightening. And they started at a very low rate per month, and that's been steadily increasing. And in October, it went to $50 billion per month. So we can see here this is the Fed balance sheet, and it went from like 800 million to 4.5 trillion. And now in 2017, they started rolling that back by $10 billion a month. And we can finally see that the unwind is kind of happening, even though it's still a huge balance sheet, which includes things other than U.S. Treasuries. So this pressure here is going to lead to more volatility in the market. People think that because capital is so much more expensive to get, that it's going to be harder for growth to occur. So the stock market's having a response to this. However, on a global whole, unemployment is still very low and wages are rising. So the Federal Reserve's mandate is actually to look out for unemployment and to maintain prices. So when it comes to inflation, they want to keep inflation in check, and they also want to keep unemployment low, which is what they're doing. And so that's why Powell is looking at this and saying that they're not going to be any more dovish than they need to be, and they're not going to be bullied around by Trump or bullied by declines in the stock market. So I think all of that combined is what really got investors scared. and what led to this 3 extra day decline, where Christmas Eve we closed at like 23.50, and we've seen a couple days of bounce, and who knows where it goes from now. But yeah, so other things, the trade wars that continue to go on, the tariffs that Trump's put up and that China continues to have, this is also putting pressure. It hasn't had a huge effect, but it has led to some worry about the economy in the future. Housing's also kind of slowed down, which is a bit of a leading indicator in the macro sense. So people are buying less houses, and the prices are starting to decline slightly, and that's starting to get noticed. So this is all kind of stuff that I'm trying to keep an eye on more to see whether or not investors are going to feel more comfortable buying more high volatile stocks like biotech. So there's concerns out there, and I encourage everybody to read the books by Ray Dalio, which makes it a lot easier to understand the debt cycle and why we go through these different cycles of low, very cheap credit and then very expensive credit, and it leads to more productivity, but we can't get that unless we offer credit and then tighten afterwards. So I also encourage everybody to watch or listen to the Macro Voices podcast. They do a great job of breaking down a lot of very important macro issues. So I've learned a lot from them. So not going to get into this chart, but basically there's short-term debt cycles and long-term debt cycles, and having those allows us to be more productive than if we didn't. Because if we can't take out credit, then we can't increase our productivity more than just what we have today. So what you're doing when you're getting credit is you're borrowing from your future self, and you have to pay that back eventually. And there's concern that where we are right now in the economy is the part where we have to pay that back. And that's obviously leads to a lot less growth, even though our productivity continues to go up. So that's all I'm going to say on that. So it looks like 2019 is going to be very volatile. If employment remains low, that should be good. If wages continue to increase, that will also be good, and we might be able to push off a recession. The stock market bounce back that we saw here is good to see, but this could just be a dead cat bounce before we see a lot more significant crash. Although the concerns that we had in 2008 aren't quite here. The similar ones that we had in 2008 aren't quite the same, so I'm less concerned than I would be if we were in that area. But looking at the XBI, I had this line up, and we obviously broke through it when just soon after I was talking about it, and we touched down all the way to 65, just under. So we're starting to see an uptrend again, but with the high volatility that we have, this could break any day, but you can use this as kind of a guide. The points that I'm looking at are around 72 and a quarter as a next really good resistance before we might see a little bit of a pullback. But again, these are just kind of guidelines, and technical analysis has its own drawbacks. So that's kind of the macro things I wanted to talk about, and let's get into more biotech specific. So a couple weeks ago, DBVT announced that they were pulling their biologics license application for their peanut allergy Viaskin product because of concerns from the FDA regarding QC and manufacturing. So I haven't touched on these companies in a while, but I do have a substantial position in Aimmune, and both of these companies are interested in helping with allergies, severe anaphylactic allergies. DBVT has a subcutaneous product that sensitizes patients to some whatever allergens. They have a peanut product, or a peanut allergy product. That's the one that I'm talking about here. They have a milk one, and I think they're doing other things. But Aimmune also has an oral desensitization therapy. So they just have a regimen where you take increasing doses of peanut protein, and that lowers your sensitivity to an allergic response that you would have. So they're both competitors, and they both finished phase 3 trials. Aimmune had very positive response in their phase 3 trial. DBVT also did, except they were unable to get a good effect. So the confidence interval that they saw was not in line with what they expected, and this made the this was an outline from the FDA, but they also then allowed DBVT to submit a biologics license application. So, there's some controversy on whether or not they would expect approval, but I think if the FDA is going to invite them to submit a BLA, that they would be approved, given that. So, assuming that they have all the concerns figured out, but apparently they don't. So, you would have expected that in a meeting with the FDA, they would explicitly go through the QC and manufacturing procedures that would be allowed. And I don't know if it's a, language barrier. DBVT is a French company, so I don't know if how this is all going down. But basically, there's some issues with the way they're manufacturing their product, or they're doing QC on their product, and they need to fix that before the FDA will approve a BLA. So I didn't listen to the call, but apparently DBVT didn't give any specific timeline, and this obviously led to some concerns because if it's due to the technology itself, they might have to really rework their system to produce the Viaskin subcutaneous cartridge in order to meet compliance with the FDA. So if it's a significant manufacturing thing that they have a problem with, it could really set back the company. Otherwise, if it's just related to the way they're producing the peanut or something like that, this could be very quickly wrapped up. So, there's a lot of uncertainty here, and it could be an opportunity. I'm personally not going to play it, but, if we look, I have the market caps down here. Aimmune's at $1.5 billion right now, and DBVT is at $250 million. So if you think that there's a chance they don't have a significant manufacturing issue here, it's worth putting a little bit of money on it and seeing where it goes, because they sold off tremendously from $14.50 all the way down to $3.90, $3.70, and since then it's bounced back and been stable around $6. But this is a huge sell-off, and it might be anticipating more problems than there will be. So there's a bit of an opportunity there, I think, but I'm personally not going to be involved. They're also presenting at the JP Morgan Health Conference at January 7th to the 10th, so there might be more info that comes out about this problem then. And there's also a catalyst in February of next year related to their milk product. But again, it's still, their whole company is based on this Viaskin subcutaneous cartridge. So if it's a big manufacturing problem, everything is going to be affected in their portfolio. Related to Aimmune, so obviously this leaves Aimmune a lot of room, and if having a first mover advantage is obviously very helpful. So Aimmune did increase in share price after this news came out, and if we look at their corporate presentation, I thought I'd just give like a quick overview of my rationale for why I think they're worth more. So they have a lot of sources here for how much the prevalence of peanut allergy in the world. And so they're forecasting in 2020 that 6.4 million people are going to have this condition and might be interested in a treatment that would lower their sensitivity. They're only going to have the indication for the 4 to 17-year-old kids. So, for 2020, they submitted the BLA, so they would have approval at the end of 2019. So if we just use this as a metric, there's about 2.9 million kids that have this. And if we assume, $5,000 a year for the product, and this is all assumptions, this is just opinion. The fun part about investing is really you have a lot of leeway in making assumptions, and that's where there's real opportunity. So $5,000 a year might be more than a lot of people are willing to pay, and we don't know how interested formularies are going to be in covering it. So, likely not. But if we assume $5,000 a year, 30% market penetration, that's about $4.32 billion in revenue. Now, with a market cap of $1.5 billion, you got to think, is 3 times revenue an appropriate price for Aimmune today? I personally think that 30% market penetration is an understatement. I think that parents of allergic kids are going to look at this and get a real relief knowing that there's a product out there that they can have their kids on, and they're not going to need to worry about them eating something and going into anaphylactic shock. So I really think that this is going to be parents of peanut allergic kids are going to jump at the opportunity of this. So based on that, it's hard to know how the pricing is going to be involved, but I do think that they're going to get a lot more interest than the market is anticipating today. Other than that, they have a few catalysts coming up. There's another phase 3 regarding their peanut allergy product due in the first half of 2019. They're starting their egg trial and their walnut trial in 2019. So these are phase 2s, and they don't take a super long time. Actually, I'd have to double check and see if the regimen is any different. But if they get a readout in 2020, it's not too far away to see how they could generate more revenue streams from this. So, we'll see how it goes. We'll see if we get any more insight into pricing and go from there. But let's move on. So the last thing I want to touch on today is the companies involved with CRISPR-Cas9. And from the outset, and some people have suggested this to me, don't invest in these companies that have all these IP concerns, because it's such a binary event. If a judge just rules that Editas is the one that owns the IP, the other ones are just going to crumble, and you can't really predict any of this. And I agree with that in general, but it seems right now that all of these companies are at the whim of academia, because there's been so many articles coming out saying that CRISPR can lead to so many deleterious effects that it just keeps hammering the stocks. So these techniques have been used a lot in research to date, and my lab used them a bunch, and I know other labs across the world. There's tons of commercialized products for research only that use these. But then we saw earlier in the year that the first CRISPR baby was apparently born, and they modified him to have the child to have HIV immunity. So I'm super skeptical of this. I just don't believe really anything that China says these days. So I don't know. I'm taking this with a huge grain of salt, but I mean, it's possible that they did this, and if so, congratulations. But who knows what kind of long-term effects this kid will have, if any, and maybe they won't. But I think the things that we've been seeing here. So Nature Medicine in the summer published a couple articles that talked about the carcinogenicity of the technique. There were other papers that talked about huge chromosomal aberrations that happen with this technique. And then lately, a couple weeks ago, there were these papers that came out talking about how most humans have adapted immunity to the Cas9 that is most commonly used in CRISPR. Which means that it would never work in those patients if the host immunity just targets it for degradation. So, these are all technology. Every single technology had to go through growing pains related to this. And we know that, there's specific intricacies related to the CRISPR-Cas9 that make it maybe uniquely interesting to certain researchers. So, and the reason for that is that it's gene editing, right? And when you start messing with the genome, a lot of bad things can happen. So just to outline some of the papers, CRISPR-Cas9 genome editing induces p53-mediated DNA damage response. p53 is a tumor suppressor, so this, could lead to some sort of tumorigenic thing. Double-strand breaks, complex rearrangements, published in Nature Biotechnology in July. And then the latest one is T cells are reactive to the strep pyogenes Cas9 in the adult human population. So tons of peer-reviewed research coming out saying that, CRISPR-Cas9 in humans might be a bad idea. And, it's all something that these companies are going to have to work around, and I'm sure they will. If you think about even the T cell reactivity thing, there's a lot of different Cas9s. They don't have to use the strep pyogenes one if they're concerned about T cell reactivity. And if there is no Cas9 that can do this, then maybe there's a problem. But just showing that one Cas9 can't be used by in humans isn't necessarily going to kill the technology. But this stuff is going to continue to come out in 2019 as the technology advances, and these stocks will continue to get hammered. So I'm not going to invest in any of them. I think investing in the companies that might use the technology today is a better idea, and especially those technologies that use it ex vivo. So any company that's looking to do in vivo, that's like giving the CRISPR-Cas9 to a human, I think is super risky right now. But targeting the cells in ex vivo and then checking them to see if they have any of these things, carcinogenicity or chromosomal aberrations, I think is a fine product. And the CRISPR-Cas9 companies themselves are absolutely beholden to the IP rulings that end up coming out. So I don't think they're a great bet either. But I thought I would touch on this because of all the crazy papers we've seen, and it's been a long time since I've seen so many papers come out from like different angles that hammer a technology. So we'll see how it pans out, but that's my personal opinion. All right, last thing I want to talk about today is my portfolio. So unfortunately, we're wrapping up the year at around -9%. The XBI is coming in at -15 or 17.4, and the S&P 500 is coming in at -7, I believe. So not great, especially since at the beginning of the year I was up after the Madrigal data, and all the NASH company has been hammered, but I've been adding a lot to my Viking portfolio, and really nothing else. I have been adding some XBI equity in one of my accounts, so I haven't added this here, but I'm gonna probably incorporate it in 2019. But I figured instead of adding small amount of shares in each one of these as the downturn occurs, I'm just buying some XBI stock. That way I get exposure to the whole sector during this downturn, and it could last a while, but I'm prepared to hold through all this. So yeah, and given that the expected volatility is still going to be very high in both the XBI and the SPX, so everybody continue to be cautious moving forward, and don't put all your money in at any one bet if you want the lowest amount of risk. So yeah, so with that, I'm going to wrap it up. Thank you guys so much for watching. Really appreciate it. And please like, subscribe, leave me a comment. And yeah, we'll see you in 2019.